Perth's property market has been on fire, with some areas seeing values double or even triple since 2020. But here's something interesting. Some of Australia's most successful investors are quietly selling their Perth properties. Today, I'm going to break down exactly why this is happening, what the data tells us, and most importantly, what you should consider before making any decisions about your Perth property. But before we dive into it, let me be crystal clear. This isn't a doom and gloom video. In fact, what I'm about to share might surprise you, especially if you're a Perth local seeing the crazy demand at property inspections right now. Also, a big disclaimer, this isn't financial advice. This is just general information. You need to consult a professional regarding your unique financial situation. So, let's look at the numbers. Perth's median house price has surged to $750,000, almost doubling in a 5-year span. Property values are up 20% in the last year alone. Rental vacancy rates are at historical lows, around 0.6%. New listings are up 12.7% compared to last year. These numbers tell us two things. Perth has been an incredible market for investors who got in early, but we are also seeing early signs of a cooling market with increased listings and longer days on market. And I've seen this firsthand with some of my clients starting to sell their Perth properties. But why? Because they've recognized a pattern we've seen before. Perth tends to have sharp growth periods followed by long periods of stagnation or decline. The last time this happened was after the money boom in 2007 to 2011. Property prices then tripled in value during the boom, then spent nearly a decade recovering from the subsequent downturn. But here's where it gets interesting. Perth locals are still reporting 15 to 20 people at every home inspection. Properties in premium suburbs are still selling fast. Strong migration continuing from the eastern states, significant investment development in the area, and economic diversification besides mining. This tells us the market still has underlying strengths. But remember, the real question isn't whether the price will go up, it's how much longer can this growth continue. So, why am I leaning towards selling if you've made significant gains? Here's my analysis. Cost pressures. Interest rates are at decade highs, insurance premiums are rising, maintenance costs are increasing, and property management fees in Perth are among the highest nationally. We also see market dynamics. We've seen extraordinary growth in a short period of time, with some areas doubling or tripling in value, which isn't sustainable long term. New listings are increasing as we see construction starting to catch up, which means more supply is coming into the market. There's also the question about opportunity costs. Other markets are presenting better bang for buck. Melbourne and parts of coastal regional Queensland are showing early cycle indicators. Capital can be deployed into these markets with better growth potential. Now, I know what some of you are thinking. Perth is still cheaper than Sydney and Melbourne. That's true, but relative affordability isn't enough. Markets move in cycles. You might be also saying, well, rental yields are still strong in Perth. Yes, but holding costs are also rising, eating away into those returns. What about the economy not being dependent on mining? Well, yeah, that's great long-term sign, but short-term market cycles still apply. But the infrastructure spending in Perth is increasing. Well, infrastructure does help, but Perth has had massive injections of infrastructure before, and they still had long periods of stagnation. This isn't a question about whether Perth is good or bad. It's about timing the market. So here's my framework for deciding whether to sell. Have you made significant gains over 50%? Second, is your property requiring increasing maintenance? Third, are your holding costs starting to eat away into your returns? Fourth, do you see better opportunities elsewhere? And fifth, does your investment strategy depend on short-term growth? If your answer is yes to 3 or more of these questions, it might be a time to consider selling. Look, I'm not suggesting everyone start selling their Perth property. If you're an owner-occupier or a long-term holder with strong yields, staying put might make perfect sense. But if you're an investor who's seeing substantial gains and starting to feel the pressure of the holding costs, now might be the perfect time to consider taking profits and looking for the next opportunity. Remember, the best investors don't fall in love with their properties. They fall in love with making good returns. So, what's your take on the Perth market? Are you starting to see similar patterns in your area? Let me know in the comments below. And if you found this analysis helpful, Make sure to like and subscribe for more property market insights. If you're looking to capitalize on an emerging growth market like the smart money does, I'd love to help you. My name is Wilson Yuan, and I helped investors identify and access high growth opportunities before they become obvious to the broader market. Please book a one-on-one strategy call with me through the link in the description below. During that call, we'll analyze your current portfolio and discuss the specific areas I'm starting to see substantial upside potential right now. In my next video, I'm going to reveal exactly where the smart money is flowing. And trust me, some of these locations might really surprise you. These areas are starting to show the same early indicators we saw in Perth back in 2020, before the massive growth cycle began. And I'll see you in the next video.